I always look at things as, what would I do? Like you say, like your investment mindset, my investment mindset, what would I do in this situation? And when you can really truthfully do that and provide that to your clients, people see it, right? And that's how you grow your business is.
Matt Lenza here with the Matt Lenza Real Estate Team, and just want to welcome Nick Popowicz from Vantage Point Mortgage, who will be sharing some of his stories, how he got into mortgages, and everything you want to know about mortgages.
Yeah, I got into the mortgage business about 3 years ago. I've been in financial services for about 10. It was kind of weird how I got in. I was in the retirement industry at the time, and a mentor of mine, John, who is the president of the company now, I saw him at a wedding, and he goes, "Yeah, come have lunch with me." And after that, I shadowed him for a day, and when I shadowed him and I saw how he was helping people and navigating through guidelines and really just creating a service for people, I was hooked. And not long after that, you and I had our first deal together where just by chance you were the agent on the buying side and kind of developed a relationship from there.
From the real estate perspective, we just want things to be smooth. You know that, and you exemplify that, which is awesome. But obviously, there's a lot of other good people out there, and we already had a system. It was already smooth. So you just said, "Hey, grab lunch." We did a deal together, so it was good. I was like, "Sure, no problem." We sat and talked, and I had no interest of working with anyone else. Mm-hmm. And the cool thing about you, not pushy, not saying, "Oh, we'll do this." You know, you came with value. You know, you said, "All right, well, we'll set you up with something. We'll figure it out." And that's what it was. And that one was great. You set the bar now where a mortgage person, in my opinion, should be.
It's important to have a team that understands how each side works, because there's a lot of times where I don't need to bring anything up to you. You're busy, right? I know you own plenty of investment properties on top of the amount of real estate transaction that your team does and managing the team. So to me, it's about understanding when and how to communicate things to you and to the clients that we're working with too, right? And ultimately making it a smooth transaction, because when you see the keys passed across the table and the seller's telling some stories about the house to the buyer, I mean, that's why I do it, right? That's supposed to be fun.
Tell us a little bit about your process when it comes to, you know, a new client or anyone. Just kind of fill me in. Like, I know nothing about mortgages, which is half true.
I find that we're not just loan officers, we're advisors, right? And just because you can qualify for $500,000, you can tell when you talk to people what their risk tolerance might be, right? What is that perfect range where you want to be on your monthly payment all in with taxes and insurance and everything like that on top of the bills that you know you're going to have?
And sometimes the way it works too, somebody will come to us and they don't have the best credit, mm-hmm. or, you know, they don't have savings where they need to be for the house that they want to get. I mean, it is a team effort there, because then I am not the most important person.
Sure.
You know, or my team, we're not. We have to hand it back to you, and then you work with them, you get their credit score up. There's a lot of different things you do where, you know, you'll give someone pre-approval and it might say, yes, you know, you can afford a $500,000 mm-hmm. house, but you'll do the same thing I'll do. Do you really want that? And that's kind of what I like about you and your team too when it comes to that. It's not just about selling a house. It's about making sure they're safe in it too.
If you found the dream home, what's the most you would be willing to go up to, right? And then how do we back into a number that's going to be comfortable for your family to understand where you should be looking, what price range, you know, what the taxes are, what areas and things like that. And you touched on it too. If somebody is maybe just not quite there, maybe it's credit, maybe it's having enough assets to get to the table, how can we coach you up a little bit so that we can make it a goal for 2020, right? How can we make it a goal where in 6 months you're ready? Maybe it's a minor tweak to something that we see on your credit report. Maybe it's coming up with a savings plan where we're going to put X amount away per paycheck or whatever it is to make you understand and help you understand, this is our goal. How do we get there? What is it that we need to do to get you there? Whenever there's competing offers, you got to find a way to have a little bit of an edge as a buyer, right? And just do more than just the pre-approval, but actually provide the mortgage commitment to the listing agent and to the seller so that it's communicated to them and they know that this isn't just us saying, hey, what do you make? And, you know, about how much do you have in assets? No, we've done all the due diligence and we can get out of the commitment.
So go into that a little bit. For someone who doesn't know the mortgage world, here's pre-qualification, here's a pre-approval, and then your commitment. I mean, they're basically what we're talking about.
Exactly.
So you would always have a pre-approval, obviously.
Sure.
But how much for the other agent looking at 4 or 5 offers, pre-approval, 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 and this person already essentially has the commitment, what does that mean?
It's taking it the next step further. It's doing all the documentation from A to Z, making sure that they're 100% going to get through, getting it in front of the underwriter, and having that commitment so that there's a guarantee on the seller side that it's going to get to the table. And that adds a lot of value, and it really strengthens the offer for the buyer.
Well, with that, what do you have for first-time home buyers?
In general, a couple programs that you generally see with first-time buyers are, I guess in a best-case scenario, a 0% down type program where it's more driven by where the property is. If it's in a rural place, you can go with USDA, right, which is 0% down. But the challenge, you can't be near a city, essentially. There's a map that specifically lays out each property. So that would be an ideal case for 0% down. But outside of that, there's FHA, which is a 3.5% down payment. Conventional loans goes
stick there too with the 3.5, because some people are really concerned about money out of their pocket. A lot of people aren't the world's best savers. So 3.5, just a $200,000 house. Well, 3.5 and 3.5, it's $7,000. But then there's also closing costs. So that $7,000 turns into what, like 17 maybe?
I would say, yeah, about that. I mean, there's things such as what state you're in is going to play an impact. For example, Pennsylvania versus Delaware, they have different transfer taxes, what the taxes are on the property. But I would say, yeah, that's probably pretty accurate. And we've been kind of seeing with some of our recent deals where we're structuring things for a seller's assist. The seller might be willing to pay for some of those closing costs, and FHA can go up to 6% of the sales price. So that really kind of helps bring in or bring down the cash to close for people and helps them get in a lot of different cases.
Well, and get in cheap. You can get into a house for almost nothing, even with 3.5% down. I forget what the that sweet spot is, but 150, 160, 170 grand. You're putting down 3.5, you're getting the seller's assist, Here you go. You're basically coming to the settlement table with nothing. And it's not a VA loan, but some people don't know that. I get it a lot where people are like, oh, I'm just waiting to save up money. I'm like, I did too. First house I bought, not knowing, was 20% down. I could have taken that 20% down, even though my mortgage payment would have went up, and bought another house the very next day, an investment property. And I say that to everyone. So I do see both sides of it. But the average person does move a lot. So that's where I'm always torn. And as you gather some of that information, just like your job, you can say, well, what about this? Or what about this? And just having done these scenarios so many times, it's helpful because you can do that quickly.
What's actually interesting too, something that I've done with your team in the past year, is a really great way to utilize the FHA with the minimal down payment or for multi-unit properties, right? So I know that kind of gets you excited because you're an investment guy, but you can go up to 4 units as long as you're occupying one of the units.
Legitimately. Let's make sure we're clear about
that.
Oh,
yeah. It has to be legitimate. There's certain stipulations, like you can't own any other properties and things like that, at least within a certain radius.
But to get into the game as an investor, it's fantastic. Because remember, with 2 units, you can do it. With 3 units, you can do it. But 4 units, that's where you spread the risk. So you live in one, and you got 3 other renters. And a lot of times, they pay your mortgage, and then some. So it's just, to me, it's fantastic. And then down the road, I don't know what the exact specifications are, you can move out, and then you have 4 people on a loan product that, I don't want to say you shouldn't have gotten, but you did it smart. You're doing it within, the parameters.
Of course.
And then you own that first property. So it really is a good way for investors to get in there the first time and start.
I wish that more younger people knew about it, that were interested in investing.
Share the video.
You get one crack at it, right?
Even helping people. We've had many people I've helped now that bought a house like that, a multifamily, and then, wanted to buy more, and they ended up joining the team. John and Tom are perfect examples of that. Rob started out a little differently, but it is really cool because they see the value in it. And not only that, if they're going to buy more houses, you know the deal.
Yeah.
I don't want to say everyone become a realtor, but if they have the knack for it and they're in there and they're data driven and they want to do some of that, it makes sense.
Yeah.
So why not have them with us?
They get hooked. It's like how I got hooked on the business, how you got hooked on the business. It's you love it, and then you find great ways to make a passive income as well. My wife and I, we own a house, and for me, we're looking at opportunities to develop more passive income, right? Not just for this year, but moving forward, creating more of a portfolio. And to me, it's, understanding the business. I've been trying to save up as much as I can because investment properties require a little bit more down. So
And there's no way around that, right? Straight investments, 20%. Just so we're clear.
For the most part, I mean, there's certain situations you can go 15% down on investment property. You're usually giving up something for that in terms of like your rates and things of that nature. If you have experience with investing, there's other non-QM programs that are out there where you can get qualified based on what the projected rent would be as determined by an appraiser and things like that. So there's other ways around it, but if you're getting in, this is your first investment property, you're looking at the full 20% down. So my first one would be, finding the right place where I think that there's a great opportunity for renters. It's going to rent at a good, at a good price that makes sense, that cash flows. And in my opinion, the property is going to continue to appraise and go up in value.
Well, you might buy a house that needs some work. And then when you put it in there and add value, then you get more back. Everybody wants the quick buck. Everybody wants a turnkey. Well, you're not going to make it with turnkey. You have to add that value. And honestly, that's what I did. So that's where, even for you, we should look at that. Because some people don't want to deal with some of this stuff. Trust me, they don't. And I'm like, I went into one house, I think the first duplex I bought, and I think I've told this before, we walk up the steps, and my uncle was the first to drop. He's like, oh, this place smells, right? It is bad. It's really bad, right? I think cats actually died inside, to be honest. And we knock on the door, and I have no shame sometimes. I'm covering my mouth, like walking through, like, listen, I don't want to throw up right here. I really don't, but I want to see the place. So I walked around, spent about 2 minutes there, came back down, and the realtor at the time's like, wow. I'm like, what? He's like, you're amazing. He's like, there's no way I was walking in that place, right? I'm like, yeah, but you redo that, there's money there. He's like, I don't care. Like, I want no parts of it. That's one of the ones that's made me, the best returns. And I still have it, and it rents great. And you got to put in that elbow grease. And you know what? It's not just in real estate. A lot of things, people aren't willing to do it, Nick. They're not. All right, Nick. Well, thanks for sharing all that with us. It's been a pleasure. And just to recap, Nick Popowicz, Vantage Point Mortgage. Obviously, Matt Lenza, real estate team here. Any parting wisdom?
Just make sure, when you're going through the mortgage process, you're asking the right questions, understanding where you want to be in terms of the new property. And the more questions you can ask, the better, because that's what we're here for. Thanks for the invite. Really appreciate it, and looking forward to a successful 2020 with you.
Absolutely,
Good
man.
to see you,
Thank
man.
you.
Thank you.